Can Bitcoin avoid disaster? Although Bitcoin has not yet created a top and is still in a macro uptrend, the similarities between the 2021 all-time high and of course the current price action are very similar. We are going to be discussing why these charts are similar and how Bitcoin can avoid potential disaster, going over both the short-term charts, the high time frame charts, and even the total cryptocurrency and total altcoin market cap. We'll also briefly be touching on the 4-year cycle and what this is suggesting for a Bitcoin top. By the end of today's video, you have a well-rounded understanding of both the macro, the short-term, and potential next moves. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. If that is the kind of content you're interested in, you can also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in joining our VIP channel, you can do that by clicking the pinned comment of the free channel, contact our admin, or check out our membership information links, our trading track record links, or even a video showing you inside the VIP channel. We'd love to see you in there. Let's jump on in. So after yesterday's video, a lot of people were getting quite concerned, and the topic of yesterday's video was why Bitcoin is showing similarities between the 2021 top and the current price action. And although those similarities are very much present, that is not really confirming that we will see the price action play out exactly the same way. A fractal does not always play out, but while that fractal is potentially developing, the risk we see those similar moves are very much real. So we need to be aware of it. We need to be coming to terms with how that could play out and what impact that may have on the price action. Now, I'd like to start the video by going over to our Telegram channel and actually talking about a post I made in this Telegram channel, which is a free Telegram channel, this morning. And the whole point of the post was to explain why these macro swings, although are very important for analysis perspectives, they mean very, very little when it comes to being a trader. A lot of traders overemphasize the significance of these macro swings and underemphasize the importance of short-term moves. Most of the money you make is derived from your day-to-day decision making. The decisions you make on a daily basis extrapolated over a long period of time, that is really what determines your profitability of a trader, as a trader. And that comes from these level by level trades, not predicting these macro swings and these macro tops. The only benefit we have with these macro projections is for positioning for longer term plays. When we're talking about decisions you can make on a daily basis, it is much, much less relevant. Let's jump into the content, guys. Like we said, high time frame, short term's looking pretty good. We have had a momentum shift over here, moving into the weekly candle close. This is the first step we needed to see for this weekly candle to actually avoid being a bearish close. We'll discuss that in a second. And of course, we do have the price rallying into that change of character, which we know to be the weekly low of the prior candle. So if we are able to get above here for the weekly candle close, that would avoid a bearish engulfing candle from closing. So a lot of key levels we are watching out for. Let's start on our market data. 24-hour volume and liquidations. Volume down a lot over here, down 22%, 158 billion. Liquidations down a considerable amount as well, down 61%. At 164 million, 94 million from longs, 70 million from shorts. Looking at the DXY, opened up over here, opened up red. We are still expecting macro continuations downward. Again, if we see interest rates drop, we will likely see this trajectory. If we see interest rates drop faster and more aggressively, the speed of which we will see this move will accelerate, and it may complete in a much sooner date than the 6 to 12 month projection. Now, yes, if interest rates do drop, that is going to be bullish for risk assets. So like we said in yesterday's video, from a structural and technical perspective, the Bitcoin chart is looking relatively weak with the similarities between the 2021 top. But if we're looking at the expectations for future economic and monetary policy, and we know policy stipulates demand, well then the future still does look relatively bright. Especially if we start to see those interest rate reductions, because remember guys, when interest rates fall, debt to service ratios decrease. When debt to service ratios decrease, the available cash flow companies have to acquire income producing assets on cheaper debt increases, meaning they can borrow more money to acquire more assets which produce income, which increases their borrowing capacity to then buy more assets. So the cycle goes on, it bolsters the asset market. When we're looking at individuals, interest rates falling results in, again, short and long-term debts decreasing, so stuff like home loans, stuff like personal loans, that increases available household cash flow, which frees up money to then spend in investing, spend in the stock market, spend on cryptocurrency, which bolsters the market. Now, the reason the market has rallied over the last year and a half is mainly because of the anticipation of future reductions in interest rates. If we look back at when interest rate reduction talk really began, it began over here. This is when we started to hear about interest rates reducing. If we look at the price action now, we are up over here and we've had only one interest rate reduction. So the long-term consequence of interest rate reductions not only happened prior to interest rates reducing with the market trying to front run and price in these adjustments, but of course, during and after these reductions actually occur, the long-term domino effect is a healthier and stronger asset market. So yes, there are definitely some economic policies that are coming that may bolster the market regardless of how the charts are developing. But that doesn't mean the charts aren't relevant. The charts are always relevant. They can always tell us how to react and respond, even if you're trading the short term. Even if this does not turn into a macro top, it very well could result in a correction which you can still take advantage of. We're discussing that in today's video. Let's move over to the S&P 500 and then jump into Bitcoin. So S&P 500, really nothing to say here. Absolutely nothing has changed. Key levels we're watching 6,000, break 6,000, expect all-time highs. If we drop below 5,700, expect the price action to correct aggressively. Until then, between these 2 points, sideways chop and consolidation. That is it. Let's jump into Bitcoin. Now, before we do, if you're interested in supporting the content like I make here on the daily basis, you can go ahead and sign up to BitGet, BitUnix, or BingX with the exchange links down below. You'll get a lifetime trading fee discount of 15%, which builds up to 45% based on your trading volume. You'll also support yourself trading on exchanges I use and I trust and get those exclusive sign-up bonuses. Well, check it out, guys. Play your ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's get right back into it. Now, as you know, the weekly candle close. Now, by the time you are watching this video, the weekly candle close will have occurred. Now, yes, I am filming this video a little bit early today because I've got some stuff to do. I'm going out to play some golf with a couple of the lads, and it is a fairly long drive away from where I live, so I do need to leave a little earlier today. So this video is on a scheduled upload, so by the time you're watching this, the weekly candle close will have already occurred. So we're going to go over all scenarios and discuss the impact of these scenarios and everything else you need to know. So as you can see already, the weekly candle close has not yet occurred. It's an hour and 44 minutes away. At the moment, the weekly candle itself is still bearish. The reason being is we still have a bearish engulfing candle. We are underneath the weekly opening price of the prior candle. So we are still seeing a degree of weakness in this candle. This is simply suggesting that during this 1 week period, we have seen more than expected weakness. We have seen a larger degree of selling pressure, which potentially indicates this to be a local top, okay? A local top. Now on the good side, what we have seen is the price action at the moment has bounced from the range high on the weekly, which provides a degree of support. Now, if we're zooming into where that range high on the weekly is, that is actually sitting just at that 200 moving average. If we're looking at where the bearish engulfing candle confirms, so the weekly opening price of the prior weekly candle, that is sitting just at the change of character. So what we can see here is we are sitting just between the bearish engulfing candle, okay, and the weekly range high. We are jumping right between this region. We'll come back and discuss this in a second. So when we're looking at potential corrections, yes, we can definitely use the 2021 top as a way to show you, not maybe that we are moving into a macro top, although it is possible, right? But a fractal of how price action reacts when we see bearish divergences, okay, and deviations from range highs. So this pattern can be applied to a short term, a 1 minute chart, a 5 minute chart, a 10 minute chart, doesn't matter. It's simply to show you a historical example on the weekly where we've seen a similar pattern play out. And that pattern is the price action breaks through a prior weekly range high or a prior range high with negative or weakening momentum, which develops into a bearish divergence, and then we'll see the price drop through the weekly range high, confirming deviation. And when we see deviation with negative momentum and bearish divergences, the probability for a correction increases. Now, whether that be a replica of the 2021 cycle or not, isn't really the point of the topic. The point of the topic is this structure over here is screaming a lot of weakness and could result in a correction, whether that takes us back to the 50 EMA or Gaussian channel upper band, or whether that only drops us very slightly to 100,000 and then continues upwards is the point. The point is, if this develops further and validates what we have as a deviation setup, the probabilities are in favor of a correction, or at least toward the downside first, rather than back toward the upside. So let's now talk about potential targets. Let's talk about macro implications, and then let's talk about, exactly what the buyers need to do to avoid this potential disaster. Because you're right, this probably is not going to be a macro top, and I didn't state in yesterday's video it was. I've stated that what we have seen in the past has resulted in macro tops. But again, there are a lot of factors you need to consider when calling macro tops. As I've stated already, I only believe the bear market will start when we lose the Gaussian channel upper band and the 50 EMA. I think a lot of people here were going into a high time frame downtrend and automatically assume it's the end, it's the end. It's not the case, guys. Like I said already, as a trader, this is really irrelevant, these moves. As a trader, what is relevant, it is the short-term day-to-day decisions that you make compounded over a long period of time, which determines your profitability. If you're holding out for that one long-term swing position or that altcoin season that might never come, who knows? Are you going to buy at the right time? Are you even going to foresee that move? Will you sell at the right time, or will you hold too long? Or maybe you won't hold long enough. Or maybe you'll just buy the wrong coins, or maybe you fumble your bag, or maybe you didn't invest enough. There's a whole range of elements that you need to factor in when you have these crazy ideologies in your head that you're automatically just going to somehow become more successful when the market's in a specific condition that you want. And I think it's a bit of delusion, maybe a bit of ignorance when it comes to new traders to think that just because they're going to see the market go on an uptrend means that they're going to somehow profit. The market has been in an uptrend since 16.5k aggressively, and how many people have not profited from it? So sometimes it's better to zoom in rather than to zoom out when you're looking at your profit. When we're looking at market-wide analysis, yes, we need to zoom out to contextualize the direction of the market on the higher time frame. But when we're looking at trading and profiting, we're zooming in a little bit. We're watching at how we can benefit from these moves on the shorter time frame rather than zooming out. Again, that's my piece of advice. I am a scalp trader, so keep that in mind. I'm not a long-term investor or swing trader, so you need to obviously contextualize what I said with my own experience in the market. So let's go ahead, guys, and talk about the short term now. So as we mentioned, the weekly candle close is coming, and we are sitting between a rock and a hard place, essentially, right? We are sitting between 200 moving average and change of character. Now, both of these levels, the 200 and the change of character, have significance on the weekly, that being the range high, okay, and that also being this level, which is the weekly opening of the prior candle. So significance both ways we spin it. For Bitcoin to see a rally upward and to avoid this deviation setup we are seeing potentially develop here, okay, we need to see two things. We need to see the price not close below the weekly range high. So even if we see a close over here and then bounce back up, that's fine. We need to not close below the weekly range high. But number two, we need to see the price break through the change of character, because the break of this change of character, this prior level of resistance, becomes future resistance. Breaking through here will facilitate a rally back to 110,000. And as we said in our prior video, if we break 110,000, that is the trigger for the price to rally to 115, 120, a new all-time high, potentially avoiding that downside correction, avoiding the deviation setup and invalidating our bearish divergence, which is developing. So yes, the buyers are not out of control. Well, let's just put it this way. They're not out of the game, should I say it like that. They're definitely not in control right now. There's definitely a lot of exhaustion. On the short term, they're climbing back into control here. As we can see, momentum is shifting, but there's still two levels of resistance they need to break through, whereas only one level of support the sellers really need to break through to send the price lower. So let's talk about that. If we lose the 200 moving average, we already know what's going to happen on the weekly. We're going to have the bearish divergence confirmed. We're going to have the deviation confirmed. We're going to have the range low break confirmed, and we're going to see a correction potentially into 98 to 94,000, which is the next area of support. On the short term, however, we have got a massive VRPV gap. Again, where does that VRPV gap take us? It takes us to exactly what we just said already, 98 to 94,000, this major area of support. So we will see a large correction into that region of support if the 200 is lost. Now, if we come up and retest and reject, we still run the risk of that happening. So for us to avoid that deviation setup and correction, we need to break above the change of character. We need to break above this 106.5K level. Thank you so much for tuning in, guys. Have a fantastic day. Again, the video will be uploaded at normal time, just scheduled. I look forward to seeing you in the video. I look forward to having you guys listen to it. Love sharing my analysis for you guys. I really do strive to be the most unbiased, analytical, but also the most educational, technical analysis focused on this entire platform. So again, like we said, no hyping, no shilling coins, no pumping bags, just pure raw TA. That's really what I stand for and what I always aim to provide. So thanks for tuning in. I'll catch you guys in our next video tomorrow. I'll see you then.